Ladies and gentlemen, Joshua Salvetti, and welcome to another lesson of the High Performance Trader, right? So in this lesson, we're going to be breaking down one of my most all-time favorite and effective and very simple day trading strategies, right? So it's called the gap fill, right? So we're going to be breaking down what sort of criteria I look for, what makes it effective, right? And why it happens so often, right? So before we go any further, guys, hit the links below, get involved with the team. Every link below, right? We got the Discord link, we got the packaged Trader Bootcamp link, get you involved with a team that shows up every single day, right? And over 15 different mini courses breaking down market concepts, trading strategies, market psychology, trading metrics, everything you need to get in and out of the market with consistency, right? And it's not just the trading strategies that's so effective, but it's the trading philosophy. It's the mentality of being able to read price action, understand price action as an auction, right? And get in and out of the market based on price and volume analysis, technical analysis, every sort of analysis combined into one, right? So get involved, guys. It's very effective and it's a very good approach. Okay, so in this lesson, you're going to get a little breakdown and preview of what goes on in the Discord and what it is I look for each and every single day. So the day I'm talking about here was Friday, July 21st, right? So I want to break down real quick the pre-market plans I was looking for and the criteria I was looking for before putting on the trade. Okay, so we're going to be talking about the QQQ, other known as the NASDAQ, right, or the ETF over here, and the type of trade we were looking for. So this last week has been pretty choppy. We've been presented a bunch of different scenarios and actually a couple different gap fills. But the day I want to be talking about, like I said, is Friday, July 21st, 2023. Okay, so there's a couple different ways to do this, right? So the way I do it, just like I do any other day, is identify market conditions, right? So you guys know I say this all the time: identify and adapt, identify and adapt, identify market conditions and adapt to market conditions, right? So you must identify what's in front of you, not predict, right? So we talk about this all the time. Predict, never. React only, right? Do not predict price action, react. And now your brain is going to consistently try to predict, right? Because us as humans, for whatever reason, we want to be right. Our brain constantly is trying to prepare us based on the information we see. Our brain wants to prepare us for what's going to happen next, right? It's called the associative bias, right? So basically, whatever information's in front of us, we look at it and then we immediately start to analyze it and dive deep into our mental files for any other time we've seen this information, right? So based on the last 40 times you've seen a gap fill, what's happened, your brain's gonna go, oh, this is gonna happen. And then the market's gonna do the opposite. That's why so many traders fail. So when I say identify and adapt, right, what I'm talking about is just objectively looking at the information the market's giving us, right? And then making decisions based on that. Okay, so what I do is I just look at price action. I identify my levels because your levels is your canvas, right? Your levels are going to tell you exactly what happens because whatever price action does around your levels, right, this is going to symbolize either a bullish or bearish market condition, and based on those conditions you then want to get in and out of the market. So some levels I always identify, right? In this case I got previous day low, right? I got it labeled right here, yesterday's lows. I have end of day, which was the closing price on the previous day, right? At 4 o'clock, when that bell goes ding, 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 whatever price that is, it's always up here, right? Labeled. And that price, end of day, is the price that I also label. It's a great indication. The battle always happens between buyers and sellers at this area. And based on what happens, we then make high probability moves on the market. So end of day, yesterday's low. And then I have this level over here, 37998, right? We'll call it 380. Now let me show you where I've gotten this. So you guys know I am constantly talking about the break and retest. It's my all-time favorite strategy, right? So the break and retest I've broke it down in other videos, but basically in a nutshell, it is a trading pattern or a price pattern that you are going to see as these conditions remain bullish or bearish, right? It really symbolizes who's in control of the market, and there's a lot of psychology behind it, explaining why it happens. So the break and retest is extremely valuable. So what I'll do is look on the 1 hour time frame, and I'll identify a level, right? So in this level was either broken, right? So I identified 380 as demand, and then we sold off through it on Thursday, right? So this was a very big indication that the market was turning bearish, right? If bulls defended this, right, then that would have been an indication that the market is remaining bullish, but they didn't. Sellers defended it. So what do I do with that information? I identify it, and now I adapt to it, right? So the way I'm going to adapt to this information is wait for price to come up and retest it, right? Because now when I'm doing my pre-market plan, because pre-market plan looks like this, right? We have a breakthrough 380 previous day, and now we're coming up for the retest, right? So we've broken 380, now the retest, break, retest, right? So in the event buyers defend this, price is going to rally because this is a bearish chart pattern, and I'm expecting sellers to defend it. But I'm not assuming sellers are going to defend it, because that right there is what's going to get you hurt in the market. If you assume things, even if you're right, that's even worse, because now you're being benefited off wrong behavior, and that behavior is going to get your account blown out and all this, that, and the third, right? So it's very important to first identify, adapt, and not assume. So we have 380, price broke right below it, and now it's time for the pre-market plan. So over here in the Discord, I post a bullish and bearish scenario every single day. So this is what I wrote yesterday at 8:25 a.m. QQQ bullish scenario. This 380 level is critical. If buyers defend this level, invalidating the bearish chart pattern, that's telling us that buyers are in control, and I will be looking for longs targeting yesterday's high, which is 384.22. And then I got the next target, which is 385.74, and then the third target, which is 387.15. So what I'm doing here is identifying, hey, if this breaks, if sellers do not defend this, right, that is an indication that this is very bullish, and I'm going to be then looking for longs targeting XYZ, right? Bullish scenario. Let's just run through that and what it looks like here. 380 breaks, buyers hold this. I'm first targeting yesterday's high, which was 384.22, then 387.15 and 388, right? Now, that's bullish scenario. Notice I'm not saying, hey, buyers are going to defend this, right? I'm not leading my team based on assumption. I'm leading my team based on two scenarios, right? And they're very generic. They're basically, in a nutshell, if this happens, then this. If this breaks, then this. If-then statements, right? For all my computer programmers out there. If this happens, then this, right? So it's very important for everybody watching this to trade this way, right? And, you know, it doesn't matter which team you're a part of, but make sure you're not assuming, right? And the good trader, the profitable trader, the consistent trader isn't always right. Right? It's not about being right and nailing, oh, I knew buyers were going to show up today. I knew sellers were going to defend it. That is the ignorant trader that loses all of his money, right? And I don't care if it's worked for you in the past. Needing to be right, satisfying your ego is the number one way to fail, especially day trading, right? So find a way to be non-biased and never assume, right? We don't predict, we react. So that's my bullish scenario. Next is my bearish scenario. If sellers defend this level, 380, look how simple this is. I'm looking to target 378 demand. Second target, 375.88. Third target, 373.33. Right? So, and then I put a graphical presentation, right, of what I'm expecting the market to do. Break and retest. Look at this. Literally highlight it, right? This is where I'm looking for sellers. If they come in, I'm targeting XYZ. Right? So, the next thing we're going to do here is get rid of pre-market data. So you come over here, you click the little gear, and you come into equities, and you unclick show extended hours trading session on equities, right? Because QQQ, S&P 500, our SPY, they're equities, right? So we want to get rid of that pre-market data here. And now I'm going to pull out the 2 minute because that's the one we ended up trading off of. I love the 2 minute. It works phenomenal. Okay, so this right here is what the open bell looked like. Price rallied right into our 380 area, right? So the gap fill. So we have gapped up, let's see. Now the gap fill always starts off end of day. Now remember, and I break this down in my course, end of day is extremely important. Why? Because the volume. Look at all the volume that goes into end of day. There is over 10x of volume. Right, look at, we have every 2 minutes, we got 2 million shares going. Over here at 12, we literally have 100,000 shares going. So there is more than 10x. It's literally like 50x volume at the end of the day. What does this mean? Volume and price is extremely important. Price and volume analysis, right? So based on price and based on volume, we identify critical levels, areas of value, areas we're looking for large money to make moves. Remember, we can't move the market. Only smart money can move the market. Only banks and institutions can. So our job as retail traders is to learn how to identify these large money movements and get in and out of the market based on it, right? So if end of day has over 20x volume, don't you think that's probably a pretty important level that you need to be, keep your eyes on? And I say this because what goes into every trade is two components, a buyer and a seller, right? So based on the demand of buyers or the supply of sellers, we get price action, right? So supply and demand is the only thing that moves the market, right? Based on demand, price goes up. Based on supply, price goes down, right? So if end of day has all this volume going into it, right, that means there's a lot of limit in market orders in this area. So imagine all that volume, all those limit orders. When price, it's like you have 10 million orders here at end of day, and now you open $2 above it, and there's only 2 million orders up there. Price is going to gravitate down to that 10 million to fill it, right? It's just how the universe works. It's the black hole theory in the universe, right? Or the suction, right? You create a force, right? It needs to be filled, right? It's just how it works. It's how the universe works. When there's a large amount of limit orders surrounding a price, there's a high probability, right? Not guarantee, not assume, but there is a higher chance that price is going to come down there to fill all those orders. If not today, could be a week from now. Even on the daily time frame, look, anytime there's a gap, right? Look at here, gap up, it gets filled, right? It happens like clockwork. Gap down, comes up, fills it. The gap fills always get filled. It's weird. Sometimes they get filled with other gaps, right? Look at this gap fill right here. It's insane how this works, right? And I'm sure you guys already know all this, but look at this gap fill that happened here. Literally 2 months later, it then gaps up to fill it. So it's just one of those rules. Don't question it. Gaps get filled. So and what I love about trading is it doesn't even matter the chart pattern or the time frame. It could be the 1 minute time frame. You get a gap there, it usually gets filled. It could be the daily time frame. It could be the weekly time frame. It could be the 15 minute, 1 hour, 4 hour. Doesn't matter. Gap will get filled. Just how it is. So once again, don't assume it. But now that we've gapped up, what do I need to see, right? What do I need to see on price action to then take the market short and crush it, right? So we got price ripping right up into that 380 area, which we identified on the 1 hour time frame as a break and retest, right? We broke below it. Now we're coming up and retesting it. So price rips right into 380, right? And we start to get these bearish candles. Now, price then breaks through this area, right? And then I enter the market short. I enter the market short for a couple reasons here. We're rejecting supply. We get more selling volume, right, than buying volume. And then this candle then blows this candle out, right? And what I mean by that is this candle started at 379.42, and this candle blew that start out showing strength. Now, my stop loss is literally right here, above 380. So I am risking about 40 cents here to make a potential $2.50 move to the downside. QQQ options, it's around 180%. So once again, what makes the trader consistent and successful is his ability to demonstrate risk reward, right? You must take trades with great risk reward. Traders don't talk about this enough. It's not about being right in the market. You can literally have horrible analysis, but if you have and demonstrate great risk reward, you will be consistent, right? So literally risking 40 cents here to make a potential $3 move. Great risk reward setup. And that's what I love about identifying these critical levels, because if I literally go short here at 379.70, I'm literally risking, like I said, 35 cents to know that this setup's not working, right? A lot of people always ask me, how do I know when to get out of the market, stop losses, etc. And what I do is I identify my chart pattern, and wherever price goes to invalidate the chart patterns when I get out, right? This means you must have very good entries, and this will push you to be such a more disciplined trader and wait for better setups. So demonstrate risk reward. Thank me later. So price does something pretty cool here. Price comes up, right, and makes a lower low. Once again, I'm not worried. Stop loss is in. Let's see here what I put in the Discord over here in the QQQ file and day trading. Okay, so right here at 9:37 a.m. shorts targeting end of day. So this is what it looked like when I first hopped in the market. Once again, rejecting 380, stop loss right there. Let's go. And then I put looking to snap the open, and then great lower high targeting end of day still. So even once price broke below 378.22, I was already up $1.50 on this move. Already up $1.50 just on this move, right? And this is why having great entries is so important. You just capture so much more of a move with a good entry. So price made a lower high. Once again, I'm identifying price action objectively right in front of me, right? Because if price then came up and battled this double top over here, and then we got a bull flag, that'd have been a different story. But instead, we got this lower high confirming price was, our buyers were getting weaker. And then we snapped the open I was talking about. And then price comes up for the retest at the open and then sells off right into end of day, right? Perfect trade, very simple trade. That's it, So that's how it works, ladies and gentlemen. Learn to, line things up. You get the break and retest on the 1 hour. You get the gap up, right? And you get the double top with the lower high. Slam dunk, right? So we called this trade on the Discord. It was perfect. I took profits right at end of day. Target hit, done. And then I was looking for a retest, and you can see here price literally came up. This is why I love the break and retest, guys. Comes up, retest this 378.27, and then tanks, right? So use the break and retest to get in and out of the market with success. It works very well. If you want to learn the break and retest a little bit more, once again, we break this out in Trader Bootcamp, not only the chart pattern, but the psychology behind it. I hope you guys like this episode. If you liked it, hit a like, subscribe for more content. And like I said earlier in this video, smash the links below. Check out the Discord. Check out the team. Your network is your net worth. So level up. I'll see you.